everyone and welcome to the program Business Point on Global Television. I am Samuel Odi. Many thanks for joining on today's edition of the program. Still in the spirit of celebration, the Nigerian All-Share Index has been on a bullish trend, all week. If we look at the trajectory from the month of November all through to the month of December, we've seen a bullish trend despite a few losses and top gainers, and as well as a few investor decline in the Nigerian All-Share Index market. We've seen weakness and a significant bullish trend, which has been amazing, and it has helped break the 1002 mark that has been set or that has been projected for the year 2024. Let me bring you up to speed with the Nigerian stock market All-Share Index and the performance all through the week, and the Nigerian all through the previous week. Previous business week, the Nigerian stock market closed its trading week on a bullish trend, on a bullish note at the All-Share Index, as the All-Share Index rather surged by 1,004.21 points to reach 102,133.30 points. This marks a 0.99% week-on-week increase, pushing the index past the significance of 1,200 points threshold, up from the previous close of 101,124.09 points as I've recorded. Despite this market's positive momentum, and as well as trading volume dropped by sharply around 46.7%, falling to 1.3 billion shares from 2.5 billion in the previous week. Market bets remained strong, with 64 stocks recording price gain at an improvement from the 61 gainers in the top parallel section. Only 20 stocks declined, fewer than 26 larger observed previously, and then the market performance of the Nigerian stock market exhibited a largely bullish trend throughout the week, with market capitalization briefly surpassing the 62 trillion naira mark before settling at 61.9 trillion as of Friday. The All-Share Index began the week on a strong note, sustaining gain up to Christmas Eve, December 24th. However, the market holidays on December 25th and 26th, and the index shared 52 points, closing slightly in the red zone. And then the outlook automatically went, and then the All-Share Index continues on a ride to a wave of bullish momentum, surpassing 102,000 milestone and setting its sights on 104,000 points level if the recent rally above 100, if the recent rallies above 102,000 points. Not viewed by the investors and oversight, the thought and the in-depth potential to advance further testing of 103,000 and eventually 104,000 threshold. This upward trajectory is expected to be fueled by consistent daily gains and mid and large cap sectors, reflecting sustained investor optimism. Looking at this now, like I rightly mentioned earlier, there was a bit of investor decline and investors not investing more in the Nigerian All-Share Index. We witnessed a bit of decline a couple of days ago. Notwithstanding, the threshold of the bullish trend went through all through the previous business week, and then coming into this week with a higher momentum of a 102,000 plus points. So with that trajectory now, the market threshold is looking very strong, and then it's looking to continue the trajectory of a bullish trend all through this week. That is what the forecast for this week is saying. But moving on, festivities done, probably we will be seeing another massive purchase that will be going on within today and tomorrow, given the fact that Nigerians will be celebrating the new year. So we are still expecting to see a high surge of a bullish trend, and as well as having momentum for throughout this week. But if anything changes, definitely we'll be bringing that up, bringing you updates on those angles. Looking at the business sector now in the market, and the dual instrument that people tend to purchase and cook dairy food and all, we've seen a significant rise in all of these food items, and it has been said and argued by different analysts that the settlement of cash has been one of the major reasons driving inflation. We'll have that conversation maybe during the week and then understand why all of those things are happening within this sector. Moving away from that, we'll be having a conversation where the Central Bank of Nigeria has alleged been misappropriated 2.7 trillion interest on ways and means. The federal government has accused the Central Bank of Nigeria of misappropriating 2.73 trillion in interest payment from ways and as well as means, advance raising serious concerns over the irregularities in managing government funds. Looking at this, the ways and the means facility, a temporary loan mechanism provided by the Central Bank of Nigeria to the government to financing budget deficit, is at the center of controversies. According to the report, the federal government claimed that the Central Bank of Nigeria retained interest charge amounting to 2.73 trillion naira using the funds for its sole benefit rather than returning them to the constituent revenue fund. The negative cash balance of the CRF stood at 17.1 trillion naira as of December 31st, 2021, a figure which also included 4.4 trillion naira in ways and means advance. The Constitution of the Federal Republic of Nigeria of 1999 as amended, and the Financial Regulation Act of 2009 strictly prohibits unauthorized withdrawals from the CRF or overdue government accounts. Section 80, subsection 2 of the Constitution stated that the funds shall be withdrawn from the CRF without approval by an appropriation act or supplementary act, while paragraph 710 of the Financial Regulation bars overdraft and the mandate that any interest incurred must be refunded. So looking at this now, the federal government is accusing the Central Bank of Nigeria of having excess and not refunding. So there've been a lot being said, but we're still waiting on the coordinating minister and the Central Bank of Nigerian governor to come out and answer to this, if this actually does happen, because this has been built from December 31st, 2021, and it has been accumulating. So talking about the point for this year, the excess for this year is 2.73 trillion naira. So we have all of this, resources gone into, and why is the coordinating minister and the Central Bank governor yet to answer this? Because it's coming from the office of the Auditor General of the Federation. So moving on, we'll be going on a quick break, and then when we return back, we'll be having a conversation where company are threatening to cut over rising costs. This stay with us, we'll be right back. Thanks for staying with us. I know you all can agree with me that you've noticed a little bit of surge in your data purchase and as well as rate of making phone calls. Now, VAT has been increased. There's a VAT that has been increased, a 7.5% VAT that has been increased. Telecom companies as well have also increased, their tariffs as well. So looking at all of those, the telecommunications operators in Nigeria have warned that service distributors are imminent unless tariffs are adjusted to account for escalating operational costs. Yes, so individuals have been complaining back and forth about all of these recent hike in price of telecommunications, data purchasing, airtime, and all of that, and how fast all of this data tend to finish. So questions are being raised, though the chairman of the Association of Licensed Telecommunications Operators of Nigeria, Gbenga Adebayo, issued a warning in a statement saying, Adebayo says, described the telecom sector as on the siege, citing soaring operational costs driven by inflation, volatility, exchange rates, and rising energy prices. He noted that despite these challenges, tariffs have remained unchanged, leaving operators struggling to maintain quality service and expand their network. The telecommunication chief warned that without an imminent tariff adjustment, operators may resort to service shedding, leading to limited liability of telecom services in certain areas. Looking at it now, a whole lot of things is actually facilitating this surge that we're witnessing. Exchange rates, tariff hike, yes, electricity tariff hike, and then a whole lot going on. So Nigeria's businesses are actually coming down, looking at fiscal policies being tightened, monetary policies being tightened, inflation on the rise, cost of living on the rise, cost of transportation also on the rise. All of this now is what an everyday Nigerian has to deal with, has to focus and to tend to get by the day. Now, telecommunication costs now it's also going up. Now, the chairman of these operators now has come out to make mention of the fact that this cost needs to be adjusted, and Nigerians has been calling time and time again for all of these costs to be adjusted, looking at the fact that businesses find it very, very hard to get to pay workers because of the fact that the cost of all running a business down in Nigeria is actually on a high. So with all of this now, moving into 2025, Nigerians have been reacting time and time again, and looking at the budget that has been taken to the State House by President Bola Ahmed Tinubu about Nigerian naira being stabilized at 1,500 naira. Some Nigerians and some financial analysts have actually argued that that is not feasible, looking at the fact that some have argued that Nigerian naira to a dollar is going to be around 1,800, some have said 1,900, and some have also argued 1,700. But the 1,500 mark that President Bola Ahmed Tinubu has projected, looking at what we have on the ground. So the analysts, business and financial analysts, have begged to differ that it's not visible at this time. But the year 2025 is around the corner, and we hope that implementation of all of these statements by President Bola Ahmed Tinubu and his cabinet will be able to help curb out the high cost of living. Looking at the oil sector, we've seen that Dangote Refinery has, has reduced his price, as well as it's also reflecting in a few petrol stations, maybe depending on where you're buying. So all of this now is reflecting to the fact that the president has promised that come 2025 there would be an ease in all major sectors of Nigeria. So looking at the telecom sector still, if these prices are not adjustable or are not going to get adjusted, the chairman has also called for the presidency to put in or pay more attention and see what can be done within this sector. We've seen the SCC and Starlight, the telecommunication company owned by Elon Musk, had a rift because of the fact that his telecommunication company is looking to increase its own tariff prices, looking at the current exchange of dollar. Nigerians have also argued that the dollarization of Nigerian economy is one of the major concerns and one of the major drivers of Nigerian inflation rates. Yes, looking at that now, FX generation has declined in the year 2024, but really in the second and third quarter there has been of a decline of the FX generation. But looking at 2020 and the fourth quarter now, we witness a whole lot of Nigerians coming back from the diaspora, and then we witness a surge in those sector. So now, what then now happens if Nigerian economy just stop being dollarize. Now the Crude for Naira initiative was welcomed, and we've witnessed that still that hasn't really stabilized the Naira. The floating of the Naira, a lot have argued that it came at a very wrong time, and then the removal of fuel subsidy also came at the wrong time. But looking at on the lighter note, the World Bank has given Nigeria a loan of $1.5 billion for subsidy removal. So with this money is now coming in, then we'll hope to see that it gets put back into the Nigerian economy, and then we would see significant growth and stability in that sector, in those sectors majorly. So moving away from the telecommunications sector, let's have a conversation around the real estate sector as the growth rates declined in the year 2024. The real estate sector GDP growth rate in 2024 were relatively subdued, recording a 0.84% in the first quarter and a 0.75% in the second quarter and a 0.68% in the third quarter. These figures lagged behind the national GDP growth rate for each quarter, underscoring the sector's challenge. A report says that according to the report, rather, despite this slow growth, the real estate service GDP contribution growth rated remained robust by standing at 5.20% in the first quarter, and then 5.17% in the second quarter, and 5.43% in the third quarter. This was the projection for the year 2025, and this sector did not even hit each of its mark in the first, second, or third quarter respectively. It stated that this contingency highlighted the sectors in the several role in supporting broader economic activities. Real estate remains a significant contributor to urbanization, employment generation, and wealth creation, and aimed its slower growth. In comparison, the construction sector showed a more dynamic growth trajectory after contracting by 2.14% in the first quarter, and then the sector rebounded with a growth rate of 1.05% in the second quarter and 2.91% in the third quarter. This rebound can be attributed to the increase in public spending on infrastructure, private sector investment, and highlighted demand for both residential and commercial properties. So the construction angle now generated more, rebounded more, and then the real estate sector now, didn't do so much. So looking at all of these angles now, that means the government is paying more attention in commercial properties as well as construction. Now, private sectors are taking turns and then driving deep majorly into real estate and commercial buildings. So with all of this now happening, and then the government planning for 1,000 housing for individuals here in the Capital Territory, we were hoping come the year 2025, and the projection that we are seeing that is going to be made public real soon is going to actually help, and then help housing deficit, because there has been a projection that the second 2025 that over 133 million Nigerians will be living in abject poverty. So the president now is doing everything possible to be able to see how that wouldn't be the faith of Nigerians as that projected by the World Bank. So the IMF and the World Bank have also, and as well as the United Nations, are also putting heads together to see how all of this is going to happen. Now the tax reforms that has been sent to the State House by the president has raised a whole lot of eyebrows. Nigerians and some state governors, mostly from the northern region, have raised eyebrows on the line that they said most of them wouldn't be able to pay staffs if all of those tax reforms have been fully implemented. Now the governor of Borno State, Governor Zulum, in his defense, has talked about the flooding that happened in his states and insurgencies he's facing. With all of these issues now, he says, and this tax reform bill coming into play, that he wouldn't be able to sustain. We've seen reaction from Bauchi State, Sokoto, and other parts of the northern country, states where they have reacted differently in the ways that this tax reform is actually going to be a problem for them and the people that they are being governed. So looking at all of this now, still the bill has passed its second reading, and in the coming year we would be able to know what the fate of the bill is going to be. Then we'll also look at what the fate of VAT also is also going to be, given the fact that there's been a projection for it to be around 7.5%. So Nigerians are waiting, and Nigerians are, on the edges of their seat to see what the year is going to look like. Now let's have a conversation a little bit around Nigerian Naira, as the sustainability of it being at 1,500 Naira is looking to be very, very dire. Looking at the current exchange rate and the FX market, the Nigerian dollar exchange rate, which stabilized in the official foreign exchange market between July and December 2024, is projected to maintain its stability through 2025. This optimistic outlook comes from the Director and CEO for Center of Promotion of Private Enterprise, Madu Yusuf, who shared his insight in an economic review for 2024 and the forecast for 2025. The Naira experienced a significant period of calm in the latter half of 2024 following a turbulent 18 months regulatory reform and periodic intervention by the Central Bank of Nigeria played a pivotal role in achieving the moderation in exchange rate volatility. Yusuf explained, by the close of the year, the official exchange rate of Nigerian foreign exchange market stood at 1,537 Naira, a modest raise for the average rate of 1,455 Naira 0.59 kobo in January 2024, and 907 Naira 1 kobo in December 2023. Several factors, including underpinning the stability and support to a positive outlook for 2025. Yusuf highlighted critical developments such as Nigeria's foreign reserve exceeding $40 billion and anticipated further improvement in reserve acceleration. This progress is largely driven by the increase in inflow from international money transfer operators and robust diaspora remittance, he says. So looking at it now, with this surge, we are hoping to see that Nigerian Naira will be stabilized as the president has projected, and so as he rightly mentioned in the 2025 budget that was set. So in the official market, we're hoping to see the dollar being stabilized at 1,500 Naira. Then now, the black market now has been one of the major challenges now. In the black market, as we speak, the dollar is being traded at 1,650 Naira to 1,750 Naira. Yes, in the black market as we speak. So now the woman in the market and the man selling yam, every other person on the roadside, when you tend to complain about the current surge in prices, they would complain and then blame it on the dollar rather, and then they'll say dollar is high. The woman selling pepper and tomatoes, vegetables in the market, always complains about dollar being high. This boils down to the fact that the dollarization of Nigerian economy is basically what's going to help curb out inflation. And now also there's been another projection that says that Nigerian remittance in cash, that's payments in cash, has been another major driver of Nigerian inflation. Others have argued that the low cost of production has also been one of the key drivers. So what is the bedrock, or what can be the final solution to this? Then some have ordered that there's no economy that doesn't run on the subsidy. That means these individuals are calling back for the, implementation of subsidy in Nigerian economy and not the floating of the naira. But the president is focused on helping revamp Nigerian economy. That was why the tax reform bills were sent, and then the forecast for Nigerian naira to remain at 1,500 naira has been given or sent by to the State House by the president. So there's just a whole lot going on within these sectors, but we're hoping and awaiting the NBS report for December, and as well as what the forecast for the year is going to be. This is how much time will permit us to take on to this edition of Business Points. My name is Samuel Odi. I'll see you again tomorrow as we talk more business. Bye for now.